Welcome back to Investing Talk podcast.
Great to be here.
Today, we're focusing our attention on travelers' companies. Their upcoming earnings report is coming up soon.
Always a big one for the insurance sector.
Exactly. It's always this tricky balance, isn't it, between, really solid financial planning and just the wild unpredictability of Mother Nature.
Right.
So our mission today is to quickly run through the source material, everything from analyst views, the key numbers they need to hit, to the technical picture, just to give you the essential context before that report hits the wire next week.
Yeah, get you prepared.
Now, hey, if you find this kind of focused analysis helpful, please take a second to hit that subscribe button, maybe like the video.
It helps us out.
It really does. And we love hearing from you, so definitely drop a comment below. Oh, and if there's a specific company you want us to look into next time, just let us know in the comments.
Yeah, definitely tell us.
Okay, so setting the stage.
Right. Well, analyzing a property and casualty carrier, P&C carrier like Travelers, it's challenging. You got to juggle a few things at once.
Like what?
Well, their historical strength in underwriting, for one. Then you've got the seasonal risk. Q3 is peak catastrophe season.
Right, hurricanes and storms.
Exactly. And on top of that, the whole macro picture, like rising interest rates, changing the game for their investments. So what we need to pull from all this info is, how do they actually balance that pricing power they have against the claims that inevitably came in?
Makes sense. Okay, let's start with the basics, the timeline and what the street expects. So Travelers is set to report Q3 2025 results. That's for the quarter ending September 30th.
Okay.
It's scheduled for Wednesday, October 16th, 2025, bright and early, 8:30 a.m. Eastern Time.
Got it. And the numbers, well, the FactSet consensus, it puts revenue around $10.49 billion.
Which is up year over year.
Yeah, a solid, though maybe modest increase, about 3.2% compared to last year. But the number that's probably causing more, let's say, anxiety is the earnings per share.
Ah, right. And you mentioned volatility earlier that comes from a pretty big sequential drop expected, doesn't it?
It really does. So the GAAP EPS consensus is sitting at $4.35. Now that's actually up, 7.2% year over year, which sounds good.
Yeah, respectable.
But, and this is the key thing, it's a steep 33% drop from the amazing number they put up in Q2.
Okay, and for listeners maybe newer to insurance stocks, that big drop isn't necessarily a disaster signal.
No, not inherently. It's kind of the expected cost of doing business during hurricane season, But that dramatic sequential fall, that's what gets investors jumpy.
Interestingly, though, maybe investors are slightly more optimistic than the official analyst models. I saw the Whisper number we tracked.
Yeah, the Whisper.
It actually comes in a little higher than the official consensus, right? At $4.48 per share.
It does, just a tick higher.
So why do you think that Whisper is leaning a bit more bullish? I mean, if analysts already baked in the storm risk, is the Whisper just hoping the storms weren't quite as bad or maybe putting more faith in pricing?
Well, that's where the dispersion in estimates really tells a story. We've got, 19 analysts covering this?
Right.
And the range is pretty wide. The low estimate is $4.10. The high is way up at $4.82.
Yeah.
That big gap basically shows the market is saying, we honestly don't know the exact hit from Q3 catastrophes.
So the Whisper is like a small bet.
Exactly. That slight upward lean suggests maybe some folks think Travelers' pricing power, which has been historically very strong, might just cushion the blow better than the average model predicts.
Okay, and that track record definitely gives those Whisper folks some ammo?
Travelers has beaten on both EPS and revenue for the last 4 quarters in a row.
Right.
And Q2 2025 was, pretty striking. Actual EPS of $6.53 just blew past the $4.57 estimate.
That kind of consistent beat is frankly pretty rare in a sector as volatile as P&C insurance. And the market noticed.
How did the stock react? Positively. We saw the stock move up nicely the day after the last 4 reports, plus 4.4% after Q4 24 and plus 3.6% after that big Q2 beat you mentioned.
Yeah.
It shows they've got a knack for controlling what they can control, like pricing.
And speaking of control, when management talked back after Q2, they really highlighted strong renewal premium changes, especially in homeowners and other lines. Net written premiums were up 4% year over year, hitting $8.48 billion. And they said that great core income in Q2 was mostly because catastrophe losses were lower back then.
Right, which sets up the Q3 contrast. But that underlying momentum, it hasn't just vanished. What's really interesting here is, even though everyone knows Q3 storm costs are a threat,
yeah, it's baked in.
the Q3 EPS estimates have actually nudged up slightly over the last 3 months. only by 1.3%, but still, analysts are slowly raising targets.
Yeah.
It signals maybe some growing confidence in the non-weather parts of pricing, the investment income helping offset the storm noise.
Okay, so let's pivot from the history and really unpack that core tension for this quarter. Q3, this is crunch time. Because Q3 is historically the absolute worst quarter for catastrophe or CAT losses for U.S. P&C insurers. July, August, September, peak hurricane season, huge claims volatility just built in.
You can't deny that risk. And the sector data we've seen, it's not looking great for Q3 25. Reports confirmed above-average insured losses during that period. You know, the numbers tracked by PCS.
Property claim services?
Yeah, the industry standard for tracking CAT events. Those higher PCS numbers put immediate pressure on everyone's results, including travelers. That's the big headwind, no question.
But there's a counterweight, right?
There is, and it's a significant one. We absolutely have to talk about the macro tailwind, rising Treasury yields.
The investment income side?
Exactly. It's not trivial. They're huge investment portfolios, the money backing the policies. They're reinvesting maturing bonds at much higher rates now. Yeah. This gives a real boost to net investment income.
Providing a buffer against the claims.
Precisely. It's a critical structural counterbalance to the claims volatility. Honestly, that yield benefit often decides if an insurer can swallow higher CAT losses without their overall profit getting totally wiped out.
So this tension, strong underwriting versus bad weather, it's playing out in the analyst ratings too. Like JP Morgan is still overweight on travelers.
They're bullish.
And their argument leans heavily on sustained pricing momentum, especially in commercial lines, thinking that will support margins through the storm claims.
They believe the pricing power wins out.
I mean, Morgan Stanley just lowered their price target, didn't they? Specifically citing above average Q3 catastrophe losses sector-wide.
They did. More cautious.
So doesn't that caution make more sense? Shouldn't we assume the bad weather impact outweighs the pricing gains, especially since those gains were probably priced in after Q2 anyway?
Well, that's the million-dollar question, isn't it? The Morgan Stanley view basically assumes the high CAT losses will eat up both the yield benefit and the pricing hikes. But the JP Morgan view is banking on travelers' pricing discipline being so strong, those premium hikes are substantial enough to create a bigger than usual buffer. We know their renewal increases were good.
We just don't know if they were good enough for this hurricane season.
Exactly. That's what the market needs to see. We should also maybe quickly mention some other contexts like risk management stuff.
Okay.
Travelers recently renewed a big reinsurance deal, a quota share agreement. It starts January 1st, 2025.
And quota share means?
Means they share a fixed chunk of their premiums and their losses with a reinsurer. It basically lowers travelers' net exposure to huge events down the road, reduces future volatility, especially in these messy CT quarters.
So even though it doesn't impact Q3 directly, it might make investors feel better about the future.
Could be part of the bullish thinking, yeah. It signals future stability.
Okay, so with all this swirling around, pricing, yields, storms, reinsurance, if you had to pick the single most important number for listeners to watch when the results drop, what is it?
Because of that seasonal CAT risk, it absolutely has to be the combined ratio.
The underwriting margin.
Yes. It tells you directly if they're making money from the actual insurance part of the business.
Yeah.
Simply put, it's expenses plus claims divided by the premiums they took in. Anything under 100 means underwriting profit. Lower is always better.
So a number like 95 means they make 5 cents profit for every dollar of premium.
You got it. Also, keep an eye on net written premium growth. It was $8.48 billion in Q2. That shows the underlying health, the demand for their policies.
All right, let's map out the possibilities. What does a good report, a bull case, actually look like in terms of numbers?
Okay, a strong bull case would mean their pricing held up incredibly well and the investment income really kicked in. You'd be looking for revenue maybe in the $10.60 to $10.75 billion range.
And EPS?
EPS probably between $4.50 and $4.90. That kind of result would suggest a combined ratio well under 95, maybe even down towards 91 or so.
And the stock reaction?
In that scenario, yeah, you could easily see the stock jump, maybe 4% to 6%.
Okay, conversely, the bear case. That aligns more with the Morgan Stanley caution.
That's right. The bear scenario sees revenue maybe slipping below $10.45 billion and EPS dipping under $4.25.
Driven purely by the storm costs being worse than expected.
Entirely. Driven by catastrophe losses just being significantly higher than modeled, pushing that combined ratio closer to 100 or maybe even a bit over. If they miss badly because of the weather, yeah, the stock could easily drop 4% to 7%.
So putting all the sources together, where does the overall sentiment seem to land?
Summarizing it all, I'd say the feeling is kind of neutral to cautiously bullish. It's this constant balancing act between travelers' really solid track record and pricing power against that totally unpredictable, high-stakes Q3 storm risk.
Got it. Okay, let's quickly shift to the trading context before we wrap up. Technically, the stock's been pretty quiet lately.
Yeah, shares have basically gone sideways since July. Stuck in a fairly tight range, roughly $194 to 208 worlds. Not a lot of strong directional momentum heading into the print.
But the options market sees fireworks coming.
Oh yeah, the options market is definitely pricing in some drama. That confirms the high uncertainty around those CA losses. Implied volatility, or IV, is quite high right now at 36%.
Which percentile is that?
That puts it in the 68th percentile for the year, so relatively high. That elevated IV basically means the market is fully expecting a significant reaction, one way or the other.
And what kind of move is it expecting, dollar-wise?
When you calculate it out, the implied move based on current options prices is pretty substantial for one day, roughly plus or minus $7.30.
Wow, okay.
Yeah.
That translates to about
3.6% in either direction.
So a decent swing priced in?
Definitely a significant overnight exposure. So for anyone listening who's thinking about trading this, that high IV plus the sector-specific risk, one bad hurricane update can swing things fast. It means directional bets face real overnight gap risk.
So be careful.
Yeah. If you are taking a position before the report, probably best to use modest sizing and definitely have your stop-loss orders planned out to manage potential gaps on the news.
Sound advice. Okay, final thoughts.
Well, as you're thinking about this ahead of Wednesday, consider this. It's kind of wild that in this super complex financial world, a giant company's results still hinge so much on, well, the weather, hurricane season.
Yeah, it's pretty fundamental.
But given travelers' consistent premium growth, their track record, maybe the ultimate long-term health of the company doesn't just boil down to the exact dollar figure of Q3 CIT losses.
What should we focus on then?
I'd say pay really close attention to what management says about sustained pricing momentum going forward, and also how the costs of renewing their reinsurance treaties are trending. That forward-looking stuff, that's what will really tell you about their margin stability heading into 2026, beyond this one volatile quarter.
That's a really important distinction, focusing on the sustainable pricing power over just the short-term weather noise. Great point.
Yeah.
All right, that brings us to the end of our analysis of the source material for travelers. Thanks for joining us.
My pleasure.
We'll see you next time on Investing Talk Podcast.